I really want to talk about this rise in interest rates. They've risen very rapidly, and we talk about how that's hit tech shares. Is there a sense that it could rise to a certain level and calm everybody down? I asked somebody else about this earlier, or is it simply not the level, which are historically low, but just the rise that has everybody concerned?
Oh, I think investors are hyper-focused on interest rates at this point, and specifically the eventual upward trajectory in interest rates. And for good reason. When we look at the recovery, so much of this has been supported by artificial policy measures, both fiscal and monetary. So going forward, the concern is that if the Fed begins to take its foot off the gas, or when the Fed begins to take its foot off the gas, I should say, the concern is that the recovery will lose significant momentum. Certainly, the growth profile is expected to slow markedly from what we saw at the start of the year, when again, we saw these extraordinary measures both from the federal government and the Fed in place.
You know, Lindsay, isn't the economy going to slow down no matter what, even with the Fed's metaphorical foot still on the gas pedal? I know your GDP estimate for Q3 and Q4 of this year, and even for 2022, it's much lower than the first half of 2021.
Absolutely. We are looking for growth to slow noticeably. Still a very positive trajectory for the economy. But when we look at the first half of the year, we were averaging about 6.5% growth, the consumer up over 11%. But this was very much supported by trillions upon trillions of fiscal stimulus, not to mention very accommodative monetary policy measures. Now looking to the back half of the year, even if we continue to see a very solid consumer, with the expiration of many of these stimulus measures, the growth profile is expected to slow. Now, arguably, to a more organic composition of growth, but nevertheless, that headline number is likely to come in about half of what we saw at the start of the year. As you mentioned, we're looking for a range of about 3 to 4%. And as we turn the corner into next year, we're looking for growth to slow further, again, still positive, but near a 2% pace. And I think it's worth warranting a mention that the U.S. economy was already losing momentum prior to the pandemic. Growth was slowing from 3% down to 2%. So going forward, again, barring that scenario of indefinite, unlimited government spending and debt creation, there's very little expectation that the U.S. economy then would be able to reach a sustained growth level much beyond what we saw at the end of 2019, early 2020, or even much beyond what we expect the longer term growth rate for the economy to be, around 1.8%.